Okay, let's start it up. Share my screen. Hold on. Sorry for the delay. My screen wasn't showing anything when I was sharing it. Okay, so we'll definitely go over GME, BBBY, all the meme stocks, and then we'll do a little bit of SPY, and then if you guys want me to look at anything, we could get into that all the way at the end. Okay, so let's start off with GME. Let me know if you guys can hear me well, if there's anything wrong with the mic. Okay, so here's where we had an ultimate fake out. This is a very rare thing that we saw, just to be clear. Usually you do not see this. So once the hourly trigger comes to the daily trigger and starts to come off it, that's 9 out of 10 times you're getting a move to the monthly trigger or to the next trigger above. And so I was very confident we would see 29.86. The fact that price just came down like this is highly unusual. I've yet to seen that. I mean, you could see here when we had this beautiful airplane setup and GME lifted pre-split $40 in 10 days. And then, if you look at any airplane setup in the market, these have a really good tendency.
Back in the month.
What'd you say? All right. As you can see, these have a really good tendency to play out very well to the upside. Like Netflix had an airplane setup on November 9th, November 10th, price was $260, and a couple days later, 4 days later, was at $310. So hope you guys understand these airplane setups are very powerful and usually play out to the upside. Now, if 9 out of 10, if you play these 10 times out of 10 times and once in a while, you get a dud, you have to live with that. You have to play the setups that Animoy hands you, and you got to live with the result, win, lose, or draw. So here, the entry would have been right here on the break above the daily trigger, and your stop loss would have been right here. Probably would have got eaten a little by theta and took a little hit, but it's part of trading. When you get these good setups, you got to take a shot every single time, whether it works out in your favor or it doesn't. So macro setup for GME, not looking fantastic right now unless something changes quickly. We could see that the weekly trigger has now sold below the monthly trigger, so you never want to see this if you're long a stock. It's not a good thing to have. Weekly trigger below the monthly trigger tends to lead to strong selling. Like if we check out AMC, AMC had the weekly trigger under the monthly trigger for already 6 months, and you could just see it's got hammered, just not really much bullish momentum. When you have the weekly trigger below the monthly trigger, you could see the monster decline that Meta went on with its weekly trigger below its monthly trigger. So when Meta was all the way up at $300, the weekly trigger crossed down and the stock got crushed all the way down to 100. So unless GME is able to repair this setup very quickly by moving back above 30, it's not going to look super great long term. So that's very important to keep in mind right now. We want price to break above 29.86 as quickly as possible to be bullish on the macro. Now, weekly velocity, there is definitely a trend here. So the trend is that weekly velocity has been getting better and better. So that is an encouraging sign. You can see it's stepping up like this. Now, if you want to have a downside breakout, what's going to happen is you draw a trend line from right here. Let's see if you might be able to do this. No, okay. So you just draw an imaginary trend line, attach this point to this point to this point, to this point, if we get a negative weekly velocity print exceeding that trend line, so pretend the trend line looks like that. If the weekly velocity next week comes down and snaps to that downtrend line, that uptrend line, then that means we had a breakout of negative weekly velocity, and that's when you can expect the stock to really get pummeled. But if the weekly velocity continues to trend up in this uptrend line, and then on the x-axis you have this vertical line right here, you have this vertical line right here at the positive. So if it keeps trending up and respects this trend line, then eventually weekly velocity will flip positive. So that's another thing to look at. Okay. So let's look at today's trading. So you could see we sold beneath the, let's remove some of the noise. We sold beneath the hourly trigger here, and price wasn't even able to break above the 5-minute trigger the entire day. Never a good sign. So this is just, you know, strong selling pressure. Now we had a series of some divergences, so here is definitely your most extreme print to the downside, and then you get your lower low over here, second lower low, third lower low, and then price like attempts to make a move to the 5-minute trigger but can't even reach there. So again, just showing like general weakness in the stock right now. So I don't think there's anything to be too excited about in the near term. I'd rather be surprised to the upside than surprised to the downside. If this stock was going to turn bullish again short term, we'd see above the 5-minute trigger, then we'd see the 1-minute trigger cross back above the 5, then we'd see the hourly velocity start to repair itself, and then we'd see an attack of the hourly trigger. Once we're at the hourly trigger, we could repair the hourly velocity until it looks something like this. Price can break above and turn bullish again. This actually looks kind of interesting. I'm trying to see if there's any bullish hourly divergences. So this reading was negative 0.069669, and this was, okay, so there was an hourly bullish divergence. So you can see the low here was 25.26, and the hourly velocity printed its most extreme print of 0.0669, and then price sold lower, and the hourly velocity was only negative 0.0667. So that tells us immediately right off the bat that there is definitely buyers stepping in big time here. That's actually a very encouraging sign. So I didn't even notice that today, but that's pretty good. So, you know, it is very possible that GME can start a reversal now. Seeing this looks a lot better than when we were just looking at the 5-minute divergences and price couldn't even make its way to the 5-minute trigger. So hourly bullish divergence, that is like the golden light at the end of this sell-off. The fact that we have buyers stepping in right here, very possible tomorrow we could turn the hourly velocity and break above the 5-minute trigger, have the 1-minute trigger cross above, make a move to the hourly trigger, repair some more hourly velocity, and then break back above. Okay, so that's GME. Anyone have any questions on GME? Otherwise, then we'll move over to BBBY. And then AMC also has a very interesting setup coming up, and I want everyone to crush that one. So I'm going to explain that one beforehand but anyone have questions on BBBY? I mean on GME first before we move on. Nobody. Okay. So let's go to BBBY. Okay, so again, we're mostly going to talk about, you know, bullish daily divergences. So over here, price sold under the daily trigger. Daily velocity was getting stronger and stronger to the downside. And then here's where we had our most extreme print. Price at the time was 704. And then price made one leg down before it retraced. So we're going to count this as the first bullish divergence. Price is making a new low in comparison to 704. The daily velocity is not making a new low. And then after this retracement, there's another leg down right here. And we're going to count this as your second low and your second bullish divergence. And then when price makes this third decline, that's your third bullish divergence, and you can see how quickly price snapped back up to the daily trigger. And we caught this entire move. Actually, I had given a stream the night before. I had given a stream that Monday night. Somebody asked to look at BBBY, and I had noticed, wait, this is the third bullish divergence. So we went long BBBY calls the next day, and they actually went like 250%. But then after price makes this move back to the daily trigger, we have to reset the count. So if we zoom in on this portion, you can see as price is selling, daily velocity is coming down with price, very normal, very normal. And then here's your most extreme print. Price is 354 at the time. So you have this leg down is going to be your first bullish divergence. Then you have this push down followed by a retracement. This is going to be your second new low, while daily velocity is now making a new low. And this right here is your third bullish daily divergence. And so what you kind of have to expect, especially if you've been using Anemo long enough, and you trust the setups, this is a mandatory long position here, because Anemo is telling us that price wants to snap up to 415 immediately with no delay. Now, yeah, it has another step first. It has to break above the hourly trigger, which is currently at 320, and the hourly velocity isn't too pretty right now. Nothing too crazy, but it's not supporting a move straight through. But again, similar to the airplane setup that failed on GME, it's kind of scary to be buying a stock that's just been getting absolutely crushed for 2 months with non-stop. But Anemo is telling us that price does want to rocket to 415 extremely quickly. And so to not take a position here, you're simply not trusting the rules of Anemo, which has proven itself time and time again to work. We know bullish daily divergences work. Recently, we had Meta. Just to give an example. So recently Meta, price got hammered, right? Who wants to be buying this? But Anemo showed us that this was your most extreme print to the downside on the daily velocity. Price at the time was 97, and then you made one new low, two new low, or if you want to count this, a second low. And after two bullish divergences, price ran straight to the daily trigger, just like that. 118, we call that 2 in the Discord. So, I understand the fear of trying to buy something that's just been pummeled, but if you trust Anemo and you trust what it's telling you that price wants to go to 415, literally not like over a month or over 2 weeks, it's telling you that price wants to go to 415 immediately. So whether this plays out or not, it's just something you have to take a shot with. Now, what's annoying is that you can't really have a stop loss on this play. Like, for example, when we went long for the original push up to 30, we went long right here on the break above the daily trigger on August 1st, but we had our stop loss right below the daily trigger. So when we went long at, let's say, 560 right here, we had a stop loss at 550 this entire time, and then we moved our stop loss to the hourly trigger. So you're able to use very good risk management. The problem with buying here is that there's no defined stop loss. Technically, all we're expecting is a move straight back to 415, but if you're wrong, where do you put your stop loss? So here's how I would recommend playing this. Now, of course, I'm not a financial advisor. The way I'm going to play this personally is that I'm going to take a position right here at 298, where I have plenty of time. So if I'm taking calls, I'm going to give myself plenty of time so I won't get eaten by theta. Now, I'm not going to take a position where it's going to kill me if it erodes 50%. I'm going to start off with a nice small position, get myself some skin in the game. Hopefully this is the bottom, and I'm trying to catch a move up to 415. That's a $1 move, $1.15 move, very good risk reward potential. Now, once the stock breaks above 320, the hourly trigger, that's when I'm going to take a much larger position. Maybe I'll quadruple my position or triple my position, because at this point, either the price is going to shoot straight to 415 or it's not. Most likely it will. I think that it will. But if I'm wrong, at this point, when I'm going in with a substantial amount of money that I'm not willing to lose more than 10% of, as soon as price crosses 320, I can have a stop loss at 317. And so when I'm entering my call position here above the hourly trigger, I'm going to use the hourly trigger as my stop loss. So down here, I can't recommend taking like a big position, because you don't know if it's just going to get hammered and there's no defined stop loss. You're not buying when price is breaking above a trigger. But once price moves above the hourly trigger, that's when you could add pretty easily because your stop loss is just under the hourly trigger. And so not only are you extremely limiting your possible downside and your possible losses, but you're also giving yourself max exposure to a possible move up to 415. And besides the fact that it's a possible move up, we've seen bullish daily divergences work on BBBY all the time. We've seen it happen 3 times this year. There's no reason to assume that this time it wouldn't work. Now, that's on the daily level. The thing with this time that makes it a little different is that there's also bullish weekly divergences. And with bullish weekly divergences, that tells you that price wants to run to the weekly trigger, which is currently at 744. So let's show you a good example of bullish weekly divergences on a Nimue. So at this point, everybody's familiar with MMAT. Now, you could see that MMAT went from 0.64 to the weekly trigger in a very short period of time. And so this is how weekly bullish divergences work. If we turn on the weekly velocity, you could see that right here was your most extreme negative weekly print. And price at the time was just about 105, 103, 106, just about that range. And then over here, price sells and makes a new low before retracing back up. So we mark this as our first new low. But if you look at the weekly velocity did not make a new low. So this is one bullish divergence. Then price sells down and stabilizes, and so this is your second new low. Without weekly velocity making a new low, this is your second bullish divergence. Once price sells down again and makes its third bullish weekly divergence, it doesn't take long for price to snap straight back up to the weekly trigger. Gets rejected because weekly velocity is negative. So when the velocity is negative, you expect the trigger to act as resistance. But then as the weekly velocity repairs and gets better and better, and over here it's only marginally negative compared to the past 6 months, then price is able to break through, and then once it breaks through, it runs straight to the monthly trigger, which was up at 217. So this is called filling an air pocket. Going back to BBBY, BBBY just had its third weekly bullish divergence. And so not only are we looking for a move to 415, but at this point, we're even looking for a move to 744. So let's break this down. Okay, so you could see that as price is selling, weekly velocity keeps making a new low, which is very normal. That's what you'd expect in a strong selling environment. But over here, where the velocity is negative 0.345, that's when things change. So price continues selling, makes a new low right here, but velocity is now negative 3.4. If this move was indeed bearish, you'll see velocity print a new extreme reading to the downside, but it doesn't. So you have your first bullish daily divergence. So again, you could even technically count this one, but if you want to be a little more conservative, you can count your bullish divergence right here, a new low, you count your second bullish divergence, and as price is forming this low, you're seeing a third weekly bullish divergence form. And so that's when you'd expect a move back up to the weekly trigger at 744. Now, something to keep in mind, so we always have to keep a natural bias and not have a bullish bias. So if we take a look at the monthly velocity, the monthly velocity is still coming down. So we are working against some nasty downside negative velocity. Now, that didn't mean much over here. Price was able to make this incredible move even with nasty monthly velocity. The monthly velocities will help us get out of our position, because with negative monthly velocity, it means that price isn't going to close above the monthly trigger during this month, which it didn't. It's got slammed back down. So yeah, even if BBBY would run, it is still fighting some nasty downside negative velocity, so that is something to keep in mind. The monthly trigger's at 1475. So now I will be giving updates on this, but to know definitively when the stock has really turned bullish, look for the hourly trigger to cross the daily trigger. All right, so you had that right here. The hourly trigger crossed the daily trigger, and you got a really nice move up. Then the hourly trigger crossed back down below the daily trigger, and you got a really strong move down. Now, if price is going to start turning up, right, and price is going to break through this hourly trigger and start running to the daily trigger, and then eventually price even breaks above the daily trigger because we know we had weekly divergence, and that means price wants to run to the weekly trigger up above at 740. If you're going to get this move, this is what you're going to see. You're going to see price break above the daily trigger, and then you're going to see the hourly trigger, which is now a 322, also break above the daily trigger. What you should be scared of, if you see price come above 415, and then the hourly trigger comes up to the daily trigger but then rejects it. An example of that would be UPST, which tried to warn people to stay away from because there was some nasty bear planes. This is what a bear plane looks like. Now, did play this for a short scalp. That was on this move. But a bear plane is when the hourly trigger comes up to the daily trigger and then rejects. You could see it like this a little better. See how the hourly trigger comes up? If the hourly trigger would have crossed above the daily trigger, that's when you get incredible moves to the upside that are very much worth playing with call options. But when you have bear planes like this, that's a bearish sign, and as you can see, the price got crushed back down. So going back to BBBY, what you want to see is the hourly trigger cross above the daily trigger, not this is 3 bear planes in a row. Hourly trigger rejecting the daily trigger, hourly trigger rejecting the daily trigger, hourly trigger rejecting the daily trigger. So, you know, the algos use these kind of movements to kind of steal retail premium money, but that's what you want to be aware of. So for BBBY, if you want to have like a more confirmed move up to the weekly trigger, which is again in a couple of steps from now, look for the hourly trigger to cross above the daily trigger. Once that happens, most likely you're going to get a fast attack to 744. And I guess, you know, once price gets there, we could start doing some more updates. To summarize, my final thoughts on the matter is that we have bullish daily divergence, we have bullish weekly divergence. The buying that has been going on here is very apparent, and it is starting to slow down the sell programs that are pushing the stock down. And it looks to me like the sell programs are sputtering out of steam right now, and they're just about completely exhausted, and now price is about to make a really fast move to 415. The way I'm personally going to play this, because I can't use a smart money management stop loss here, I'm only going to enter a small position here with plenty of time on my calls. I'm entering calls, I'm not entering shares. I'm gonna enter a small call position here, and then once price breaks above the hourly trigger at 320, that's when I'm going to really take a big position trying to capture the move up to 415, but I'll have a stop loss right below the hourly trigger. So the maximum amount of loss I can have is about 5 to 10% once price breaks above the hourly trigger and I take my position. Now lastly, let's end off with AMC, because there looks to be a really nice move shaping up for AMC for calls. Yeah, like Mackenzie says, no dates. We don't do dates here. Okay, so here, this is the bullish cross that I was talking about, where the hourly trigger crosses above the daily trigger. That's when you can expect bullish momentum to continue. So take a look at this setup. I do think we are going to end up crushing this with calls. So we originally bought calls when price broke above the daily trigger, and when we attacked this weekly trigger right here, we could see that the weekly velocity was still pretty negative, and so this was our sell signal right here at the weekly trigger. That was a really nice play. Bought at about 637, sold at 795 in just a couple of days, and then price did this just pinning back and forth the hourly trigger, and then we took calls again here, and we're like holding them here. We weren't sure if price is going to break above the weekly trigger or not, because at this point the weekly velocity is not negative enough where price can't break above. Price could break above with these weekly velocity prints, and if it does break above, price can go to 935 in literally a day. So you would see price break above 788, and within a day or two price will fill this air pocket. I think it happened, yeah, similar to this. So you could see price break above the weekly trigger, and immediately, what was it? This was a Tuesday, August 2nd, August 3rd, August 4th. Yeah, in 2 days it basically filled the air pocket. And then once this is actually a pretty cool tip, you guys should know this. Once an important trigger cross happens, like the hourly trigger crossing the weekly trigger, you have to expect a counter trend move back down to the hourly trigger, which is exactly what happened, and then the stock continues moving up. The reason why they do this is because once you get this cross, it's a very bullish cross, and the algos know that they're taking the stock up. So they want to shake out as many people as possible. So whenever you get this cross, we usually sell and sit on the sidelines for a bit, let the counter trend move happen, and then buy a dip at the hourly trigger. Usually works out pretty well. So for AMC, the next long we want to take is above the hourly trigger at 739, and then because there was already 1 rejection, 2 rejection, 3 rejections of the weekly trigger, I do believe next time price attacks 788, it will break above. So I want to be taking calls right above 739, and I want to ride it to 935. That's where I'll be, very careful with risk management. I'll probably be down at the day trader level looking for bearish divergences up at here to know if I should sell at 935 or not. But the play is, calls above the hourly trigger at 740, 739 with a stop loss just below. So let's say a stop loss at 730, 735 even if you want to be conservative. Maximum risk is 5 to 10%, and you're either taking the move up to 788, or you might get lucky, or I think this is actually has a better chance of happening. Price breaks through the weekly trigger, which is a big acceleration level, and shoots straight to the monthly trigger. So that's what I have for AMC. Obviously, this play is completely invalid if price breaks below the daily trigger, but that doesn't seem too likely. The daily velocity, there was no bearish divergences, not really. This was hidden bearish divergence. But it doesn't seem like the daily trigger is just going to crack and break and price will break right through. So I'm looking for a break above the hourly trigger to get long again and ride it up to either 788 or 935. But I do believe that once price breaks above the weekly trigger, this move will happen in literally a day or 2 or 3, very quick move. So that's all for me. If anybody has any questions, I'll take a look at all of them now. Anybody on the Discord?
Can you take a look at Meta? What their like velocity is doing?
Yeah, sure, Danny.
Wait.
So Meta, this looks like it's setting up into a bear plane. So I would not be looking for any longs here. So you see how the hourly trigger came up to the daily trigger. It had a chance to turn bullish. Now, if the hourly trigger would have crossed, by the way, this would have been an incredible long all the way up to 158. Believe it or not, that's what would have happened. If the hourly trigger crossed the daily trigger right here, it would have meant that the algos want to take it back up to 158. So we should definitely keep an eye on Meta in case the hourly trigger does cross the daily trigger, because, I mean, that's a potential 35-point move you're catching. So, that's a lot of money to be made here. But for now, we can see that the hourly trigger came up to test the daily trigger and has rejected. So once you see price, so it looks like price drifted up and down, pinned around the hourly trigger for a while. So they want to keep it sideways for now. But once we see negative hourly velocity start picking up, that's a short. So yeah, Meta, it just looks like a pure short right now. You can see that with this new low, hourly velocity made a new low. So it does look like it's going to start selling off pretty hard. That's what I would say.
Awesome. Thank you.
Hope that answers your question. Okay, I'm going to read some of the comments here. Unless anybody else has anything. Somebody asked if I could go over how to use the Nimoy triggers. There's like 10 tutorials on my channel. I just did UPST. I'll look at it again. I know some of you guys are in it. Don't really want anyone losing money. So I'll be honest, for UPST, there is a chance it could attack the weekly trigger. There is, depends how you want to count it. So here's your most extreme print, right? Price was 31 at the time, and then you do get a new low and a new low, and then price tries to attack the weekly trigger, but the monthly velocity was just absolutely horrific. Horrendous monthly velocity, negative 5.8. That is an extreme reading. And if you're curious why it had such bad monthly velocity, it's because the stock sold from 500 to 10 to 30 or whatever it was. So it had a really nasty monthly velocity. And even though it tried to make this attack of its weekly trigger, it got rejected pretty early. So I'd say you kind of have to, you don't have to reset the count, but let's say you would do 1 here, 2 here, 3 here, and then again, you know, price tried to attack the weekly trigger. The reason why it keeps getting stuck at the daily trigger, you guys see this? This is important to know. You see how price just keeps trying to break out above the daily trigger and gets smacked back down every single time? The reason for that is simply because of the horrendous, nasty monthly velocity. So you have to understand that the backdrop of monthly velocity, you know how we always say the stronger the hourly velocity, the stronger the 5-minute trigger is going to be? I don't know if I could find a specific example right now. When they're strong, here, actually, let's see if we could check Apple real quick. I think Apple was trending down today. Yeah, so look, see how the hourly velocity is strongly negative and price keeps rejecting the 5-minute trigger this entire time? Because the stronger the hourly velocity is, the stronger we need to expect the 5-minute trigger to provide resistance. So bring us back to UPST, because the monthly velocity is so negative, we have to expect the daily trigger to provide a resistance, and that's pretty much what it has been doing. So although price has been popping its head above 1, 2, 3, 4, 5, 6 times, it's all because the monthly velocity is so bad. I mean, -5, that's craziness. It's really strong downside velocity, and so that's why price keeps getting rejected. However, because the monthly velocity is actually getting better, see 1, 2, 3, 3 months of improvement since the worst month. Because it's getting better, it could be that after this month ends, you know, you'll have a better looking monthly velocity print, and at that point price could break above the daily trigger. But I'm saying for me to consider taking a long in UPST, I would have to see the hourly trigger cross above the daily trigger, and then I would expect a move towards the weekly trigger at 37.70, which can happen very fast. Any move above 37.70 can bring 84 very fast. But I'm not interested in playing like 16, 17, 18, 19, 20. I don't want to play that level. What I want to do is I would much rather wait for the hourly trigger to come cross above the daily trigger, and once that happens, then I have no problem taking a long. We did get this move back up to the hourly trigger, and I actually mentioned this a couple of days ago, because here was your most extreme print to the downside, and then you had 1 new low, 2 new low, 3 new low, right? And all these lows did not have a print that exceeded this one. So I said, here's your test. You want to see if the stock is bullish? Here's your first low, here's your second low, here's your third bullish divergence. So because you now had 3 bullish divergences, either price is going to go straight to the hourly trigger, just like that, 1, 2. Or it's going to drift sideways while the hourly trigger comes down to meet price. If it attacks the hourly trigger from its 3 bullish daily divergences, then that's showing residual strength in the stock, and that's a stock that I might want to be long. But if the stock is only drifting sideways with its bullish divergences and then the hourly trigger coming down to meet price, that's not a stock that I'm interested in being long, because that's showing me weakness in the stock. When I see my most extreme print here and I get 1 bullish divergence, 2 bullish divergences, and 3 bullish divergences, if the stock is bullish, it's going to attack the hourly trigger immediately. Because it only drifted sideways while the hourly trigger came down to meet price, first of all, obviously it's going to get rejected and come down further. But second of all, it's not a stock I want to play right now. So either way, that's all for me. I hope you guys enjoyed. Thank you everyone for tuning in. If you guys have any more questions, I'll take them now. But otherwise, I'm off here.
Thanks, James.
You got it, man. Thanks for tuning in.
Thank you.
Thank you. Look at my disc. All right, have a good one, everybody.